What's happening, guys? I hope everybody had a fantastic weekend. This is the last Sunday video for October. We're already into November. We've got Halloween tomorrow night, and that's that. We're cruising into the end of the year. So I still have not been, performing exceptionally well in this market. I feel like a lot of the trades, the reads are right, but what happens is it happens either, overnight, or you've got to kind of chase it down on low liquidity. And for me, I'm just not confident in, kind of scaling and sizing into that trade, especially when there's such big range right now. If you're wrong and it swipes back the other way and you've sized in just because, you have a certain bias, then, you end up kind of caught on the wrong side and with too much size. So for me, all the swing ideas have been phenomenal. They've been really, really working well. We had RBT the week and a half before last. KULR has been continuing. It was the first red day on Friday, I think, since the swing idea in the mid, I think it was 120s, 130s. Went up and over 220s. RUM, we talked about. RUM was a hit piece, a negative article that came out towards the lows into the 8s and the 7s. And the bottom dropped out. So it kind of reaffirmed what the negative article was saying within the price action, right? Sometimes an article comes out and it just absorbs and starts to go the other way, so everybody just kind of disregards the article and be like, that was just a crap piece. But this one actually faded, stayed heavy, and stayed on lows. So it kind of gives you that feeling like, hey, maybe that article was onto something. Hey, maybe it is going to 5, right? And then all of a sudden it rebounds. Then we had the catalyst we talked about with Tate and Steve. Steve will do it on the video at 2 p.m. one day. Ended up holding at 8, and then it started to continue to grind. And so the thesis, the trade idea was basically dips. If 10 firms up, I'm thinking that it's going to go 10.50 to 12 on a nice parabolic move. A plus setup for me would be some sort of parabolic move and then fades off. But fantastic opportunity, bigger picture idea, not looking for just intraday, but more like maybe a little bit less size and letting this trade work. So trade idea was great, ripped up over 12s on Friday, sold, and then it flushed down under actually 11 before end of day, and I picked some back up again. So currently have a position on that one. DUO was sort of the shoulda died mentality that we talk about. And so what I look for is that first volume range. Then it came all the way back down, and it just kind of slowly but surely inched up back red to green, which it went from like 80s, 80 cents, 90 cents, all the way back up to 120, 130, 140. That's a big move, and I don't think a lot of people expected that. And then after it held a couple more days after week opens, here we are, we're over 2, right? So it doubled. And I think that a lot of shorts are on the wrong side. I think a lot of longs are probably out because of all the gap downs, right? So we talk about, it's easy to get a lot of size at the lows, but to be able to make it through that, what happens is it pops up, you sell some, comes down, you get a little nervous, you sell some, and now, you had this size at the top, and now you've only got, a small amount of what you had. And then it starts to trade a lot thinner and does, some crazy uptick. So that would be ideal if that's what happens. But again, my swing bigger picture ideas are performing in this market, but my intraday trades, I'm just not getting there confidence-wise and confidently. And you need that, not in a cocky sense, right? You don't need to be overly confident and, I'm going to be right, this and that. Obviously, the market's going to humble you. But you need to be confident knowing that you've got an edge here. It's a setup that you've seen before. You know that more often than not, the risk is worth the reward. And even if you are wrong, you're risking maybe 1 to make 3 or 4 or 5, 10, whatever. Typically with the A plus setups for me, I'm able to start in and scale, and maybe it ends up being a 5 or 10 or 20 to 1 kind of reward, where I start with a particular risk, but as the trade progresses, I'm continually scaling into a winner. And what originally maybe was only $1,000 risk turns into a 20x, 30x, 50x type of reward, right? And that's, to me, really what an A-plus setup is all about. It's something that you're familiar with, something that's worked before many times. You have proof. And to me, that's the overextended charts without any correction, the gap up the next day, the parabolic move, exhaustion, and then I start to scale into the trade. However, like I was saying earlier, in this market, all of that sets up perfectly, and the next day we gap down, right? So it's either going to consolidate and grind a little higher or continue lower. And if you look at it, are you confident chasing with size down on the gap down? And, you know, you kind of had to do that with PDD. You kind of had to do that with BABA and all those other ones the first day that it unwound. And for me, I'm not confident doing that. So anyway, that's kind of where we're at. I think I've been a little bit misfocused as far as some of these layups. You know, Mara we talked about this week, and BA. There was a lot of really, really nice trades. And usually the ones that I've been picking, such as the PDD and the BABA and SHOP, the first 2-3 minutes is what, you know, reels me in. You know, I see that huge move. We've got 2, 3, 5, you know, sometimes $7, $8 type moves, mostly like 2 to 3 to 5, real fast. But it dials you in and it takes your focus, and then it just kind of consolidates throughout the day. And you look back at 2 p.m. and you're like, where did the day go? You're waiting for this trade to set up, and it just doesn't get there. So, you know, quite honestly, if I wasn't, you know, normally I'd be probably getting off desk and kind of just waiting for the trades that I'm familiar with to, you know, come back. But, you know, sometimes I stick around and I try to go through, you know, setups and scenarios and channels and all that kind of stuff. We talked last Sunday scan about the channels. We talked about the failed follow through setup. So I showed a lot of those live this week in the Traders Lounge, just going through, using the time more wisely to, you know, make sure that members are getting it and understanding, rather than pushing buttons and rather than forcing the trades. Because I know that from, you know, my past, you know, this type of market is where you start to press and you don't have the edge. And if you don't have the edge, then if you're right, that's great. You're going to make money, which, you know, it's good that you made money, but you're getting rewarded for being reckless, right? And if you're wrong, then you're going to lose at an exponential rate because, you know, you're scaling into something with no edge. And if it doesn't go the way you think, it's going to go, you know, the way that you weren't expecting, probably at an accelerated rate. So just be cautious. And it's okay if you are just flat for a little bit until you start to get that confidence back in the sense that the trade setup is there and you can be confident. Not necessarily confident yourself, but just knowing that, hey, here's my setup. I've seen this before. I know there's an edge. This is where I'm going to apply my risk towards. Versus, well, this could go that way or it could go the other way, but I'm going to push anyway. And that's where people get in trouble. And I do get that feeling, that sense of, you know, kind of just pushing to push without really having that edge on your side. So just think about that. Think about it before you place the trade. There's been a lot of small caps that, you know, you look at pre-market and it's just this nice channel. And everybody's got this great idea. It's either going to break out or break down, right? 50-50. What's it going to be? So what I've always said every morning, put a price alert right here, put a price alert right here. Then you won't waste 2 hours watching it. It's going to alert you when it hits. And if it breaks down and it starts to peak out a few times, then you've got to trade. If it breaks out and it starts to base a few times, then you've got to trade. But otherwise, you're not wasting time. So just be aware of that. You should feel comfortable in these trades. And that's just basically where I haven't been lately. I don't feel comfortable sizing into particular trades. So, you know, I might be taking a bunch of trades, but I'm just not sizing into them. It's been maybe 3 or 4 names last week I sized into, you know, and it just wasn't something that I felt super great about until, you know, particular setups formed. So it's a waiting game. and it's a great time to kind of fine tune your setups and reevaluate whether or not trades that you took were good, whether or not it was, you just lucked out. And then last but not least, last couple things, small caps. Small caps have been there. There's usually, it seems like there's one ripper per day, QNGY or whatever it was on Friday. And then before that, we had EPIX. So it seems like it's starting to get kind of focused on this like one flavor of the day. But what you'll notice is, FNGR and PEGY and all these other ones that we were talking about over the course of the last couple of weeks, once everybody gives up on them, look at them slowly fade, right? So there's an edge there by not taking these things off radar. We talk about that all the time too. But there's an element to those trades which maybe you're not comfortable with, such as swing trading, such as, letting these trades work, going smaller size. A lot of these trades, we try to scale in and nail that move, but you end up getting kind of chopped out. Had you just gone a little bit smaller and let the trade work, maybe it'd still be there. So there's a time to push and there's a time to take a step back. Doesn't mean you can't make money right now. There's plenty of stuff out there, but just be cautious with, where you're aggressive and where you're pushing, and don't be afraid to just not click the buttons. And last but not least, we've got a flash sale, finally. We haven't done one all year, I don't think. So there'll be a link on Scan. You can check it out, and it's a great time to get involved, get focused for the new year. Everybody always pushes things off. I'll do this next. I'll do this, later. I'm going to start this on the new year. The best time to start is now, just like I was talking about last week and the week before. Get prepared for 2023. Don't wait until the new year. Don't wait to make the changes. Start today so that you build those habits, because those habits might take 3 or 4 or 6 weeks to kind of develop. But at least you've got time before the year end to start 2023 in the best, kind of performance, the best, I don't know, it's just like working out, right? Like, are you going to just show up for a marathon, or are you going to be in the best shape of your life, for that run? And, you might as well start training for 2023 right now. So anyway, that's that. Let's get into Scan for the week ahead, and let's see what we've got for the week. All right, guys, so for the second part of Scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. You should know that by now, but if you don't, shut it off. If you're looking for me to tell you what to buy or sell, stay on. If you're looking to get some information as to how to anticipate particular moves, how to get prepared, what makes a good move, what makes a good setup, and what doesn't. And I got a PM the other day, or actually this morning, and trading with the channel has helped me immensely. It helped me with the APE long and the EPIX long yesterday. And this feels like such a big lesson for beginner and intermediate trades that for me, it just now sunk in. And so the reason I read that, it was just a little bit of feedback from the failed follow through momentum kind of channel that I went over last week in Sunday video. And I keep on going back to it, during the week in the room and showing examples as to, what that looks like so that you can identify it on your own. And then also, as far as the channels, when should something have broken down? When should something have broken out? And it takes a lot of the guesswork out. And a lot of times, if you just take a step back and you draw those lines, you'll realize that you probably wouldn't have pushed all those buttons you did. It's about getting, the trade on the right side, for yourself, meaning let the trade kind of do what you're anticipating before actually anticipating it. Because if you're wrong and you anticipate it, you know how it goes. It goes the other way real fast. So I'd rather be on the same side as wherever the money is going. And the more that you anticipate that, it could work. But when it doesn't, it's going to be dramatic. It's going to be fast. It's going to be really choppy, and you're not going to have a chance to get out. So I always like to be on the right side of the trade. And if that means missing the perfect entry, that's fine. I'd rather miss it than get, a swipe and get taken out, or a random flush and get taken out. So NUVL was a nice one on Friday. We had a nice, the goal was 9:45, 10 a.m. where it kind of walks down, and then potential swipe up. And, even pre-market, we talked about the potential of a circuit halt. We literally tested a circuit halt, and then that was it. So we had pretty much a 34 all the way up to 40 move. So it failed. It went into circuit, I kind of call it circuit halt formation, right? As most of you guys should know, a circuit halt has to hold that best bid for 15 seconds before it halts. So maybe it held for 8 seconds, 9 seconds, whatever, but it went into the formation, and then it ended up coming down. But, thinking about it, you're talking about a move that basically went from 34 to 40, almost $6 per share. So if you're not locking in, maybe you should consider that in the future when it's $6 per share on 2 candles. Because in the event that it does not halt, it's going to come back in. Granted, it only came in a little bit, but still, be shaving some off around the core, especially in this market when things are trying to identify, which way they're gonna go. So anyway, we had a nice failed follow through setup that you guys should all be familiar with if you paid any attention at all to the video last week, and you've got kind of a couple peaks here, but then you also have a little bit of a breakdown here. Against this support, finally breaks down under that 36.40 range, and pretty much never looked back until late day, and it rallied back towards VWAP. But that should be something that you could apply last week's lesson when we went over the BAC examples and the EFOI examples. That is the exact same setup, and whether or not you took the short, or whether or not maybe you were long and you were overstaying and trying to it's okay, I'm going to kind of see what it does. No, that's a failed follow through setup. So you don't want to be long in that situation, because there's more often than not, it's going to break down, right? It's about edge, and that it's a setup for a reason. Anyway, so a situation like this, I usually wait and kind of get a feel for it off the open. So I'd be looking for maybe a weak open, maybe $1, $1.50 pullback, and then possible rally back red to green. Otherwise, I'd look for a gap up versus this area over here, 36, maybe I would call it 36.50 to 37.50, right? So sort of that opening zone, let it exhaust out, and then watch for it to fail. So I'd be prepared for both ways. I'm not trying to, take both sides here. You either prepare for a gap up, push, and it fails, or weak open, traps, and rallies back. Those are the two trades that I would be prepared for on a situation like this. Shop's been a fantastic kind of grinder. The level that we've talked about all week has been the 33.70 level and 33.55. And the reason for that is if you go back, you can see all day over here, it was just basing there. Every time it came back and checked in. So until it starts to form a top over here, we're in go mode, right? And dips are going to get absorbed. The only reason people would get that feeling that they need to sell is if this level starts to peak out. And if 33.70s to 33.55 starts to peak out, then you might have a sentiment shift. So what does that mean? That means anytime that you maybe are fading it, there's no problem. There's no problem with fading it ahead of time, and anticipating that. But if you are, you've got to be present before those levels, assuming that they're going to hold. And then you can always re-add if they don't hold. You can always rescale into that trade if they don't. So I think that's a lot of, I think a lot of people get caught up trying to anticipate it and then force that trade to kind of break down, and they overstay, and then it kind of grinds them all the way back up, and they look at all right, I was up, I'm going to add a little bit, and then they get blown out. I've done that a million times. So The other thing too is you can see that we're starting to get a little bit of a toppy action over here. So in my eyes, if 3450s were to gap up, I'd be looking to fade it back under that level or any exhaustion towards 3450s. I would not want to be short and have like a hard stop at 3450s because there's a high chance that you just get taken out and then it fades off. But you can see that we're starting in this channel, and I would be very cautious getting too aggressive down on this range or up in this range over here. But if it starts to base here, you're gonna have a nice squeeze out, 37, 38. If it starts to peak here, you're gonna have a nice breakdown, maybe, you know, towards 30 to 32 range. Other than that, QNGY for a main watch. I don't love it. You know, this is one of those where it's possible that, you know, they could raise at any point in time. So I'd be cautious even pre-market. I wouldn't want to touch it. Sometimes they fire down that, you know, if you remember APDN, they did it pre-market. But it just depends on what the price is. And if people are expecting really cheap and it comes in better, then it might end up squeezing just like APDN did. But keep an eye on this because they are basing it over here. And you can kind of see this, you know, pretty much consolidation range over here. So if we start to base over the 320s again, you know, we got a week open, it starts to consolidate. I'd be looking for a rip, red to green. I think there's a lot of shorts here. There's a ton of volume. But that said, it's a very high risk trade, especially pre-market, especially into the close 2 to 3 p.m. plus and after hours. I'd be looking for the potential of a rip, you know, red to green, and then probably move on. It's not something that I would want to trade with size. It's not something that I would want to be aggressive and try to hold all day just because the longer you hold it, in my opinion, the risk goes up in the potential of a raise. So anyway, I did trade it, you know, based on this. It was a kind of a shoulda died setup over here, and we had a nice little squeeze out. But again, looking left, you know, what can you learn about looking left and what kind of levels and what would cause you to potentially sell it as it comes back? And if you go back and look, you know, it's not rocket science. You see that it blows off the same spots and then breaks down. So, you know, that's not to say that it has to do that, but there's a high probability that that's what happens. And in the event that 430 starts to base, you know, in this situation, then that's the point where you'd want to take caution and not obviously scale into a, you know, at that point, a loser, right? You'd want to maybe take a step back. But you can see stuff move and fail, and you know, pretty clear cut. So I hope these channels help you guys see it visually, both intraday plus, you know, where to potentially anticipate that it's going to run into some sort of issue. Moving on to failed follow through. Those were all the main watches. Those are probably what I'd be focused on off the open. But honestly, in this sort of market, I've been very hands-off of the open. A couple trades here and there, but I don't want to get blinders on and focus on the wrong stuff. I did that enough over the last 2 weeks where I focus on, you know, the PDDs or, you know, some of the other ones. Even, for example, NEO. NEO I've been all over and very focused on. And either you get the gap down overnight, which kind of had to be there, or it opens flat, but it just falls right out of bed real fast on low volume. And you either had to risk up and take the chance of being wrong, which for me, it's 50-50. So, you know, it's unfortunate to miss them, but you got to just be cautious in this market. T, you can see this is, you know, one of those A-plus type setups that I'm just monitoring. It doesn't mean tomorrow I'm looking for it to fade. It's no different than BAC, you know, when I had it on watch over here and we took advantage of this move over here. Same sort of thought process. Higher the better it goes. I'm looking for a gap up, some type of blow off, and then sit back. Doesn't mean that I think it's going to pull back long term. It doesn't mean that I think it's over. It doesn't mean that I'm bearish. Just means that I think there's going to be a short-term profit taking. That's what I'm looking for. So ideally blows off 19 and sits back. We'll see. Set your price alerts. Snap, same deal. So far it's rallied back pretty big. Ideally we come back and fill this like gap over here. 1050s, we'll call it 1050s, but 1050, 1060 range up in here. That would be ideal, where it gaps up and it blows off, and then it sits back and heads back towards, nines, something like that. So we'll see what happens with that. Neo's been good, but like I said, it's a little frustrating to miss the trades, but it's at the same time, you got to give yourself a little credit for not, just chasing it one way or the other, because what if you did take a particular trade and it's, you can see how it goes up and down. It's just so random. And same thing with PDD off the open. Every open is just so crazy. This particular day it had a lot more range and it was a much better trader. But for some of the other days, you've got the move right off the open, and then it's pretty much flat for, most of the day. So it's very difficult. Most of the moves happen overnight, as you can kind of see, and it makes it for a difficult trade. But Neo, higher the better. Ideally, if market stays strong, then great. I probably wouldn't be fading it, but if it stays weak, I'd be looking to fade it versus 10. Sober, this one finally came in a little bit. This one's been not tough in the sense that like I fought it at all, but just tough in a sense that like, what do you do with it? Every single time it looks weak, it comes back, and every time it looks like it's going to break out, it sits back, and then it looks like it's about to break out on the daily chart, and then here we are, we're back to this mid 3 range or whatever. So it's a difficult one, but I think this is going to be one of those where once you forget about it, just like FNGY, or excuse me, FNGR, just like what's the other one, Peggy. Once you stop trying so hard, then the trade's going to come in. And I think that's really, maybe set some price alerts at 3 and 320s, etc. on SOBR. Continuation side of things. Duo. Duo has been fantastic. I currently have a position. Idea was on this high volume day, potential liquidity trap type of situation. The wick should be looking familiar. I mean, we discuss these every single week on Sunday video, where you want to see the dip and then absorb back, the dip, absorb back. That promotes longevity in a name. And in this case, you even had this blow off day, sits back, still closes green, dips get soaked. And I think that this was probably a blowout of all these shorts that came in. But we'll see what happens. This is a relatively thin name, and it has a history of failing after that first high volume day. But this time it's held. So could we have, a nice breakout? Absolutely. I'd love to see it kind of base and hold over 2 for a couple more days before it does anything too crazy. But, it is one of those types that could be a 4 a.m. type runner. But I honestly, I'm hopeful that it's not, because I'd rather get some more longevity out of this thing and have some sort of, circuit halts or something crazy during the day if they have soaked a good portion of the stock back. And so we've got 11, 4, 4, 4, 4. So we've got about 25, 30 million volume. So 10x the float or so, which, if it starts to consolidate and hold for a couple days, then you have a T+2 situation. It definitely could be fun. That said, if you hit a wall and it fails, don't be overstaying. And each time that it's ripped up, I've reminded the room, if you are trading it, make sure you go ahead and, lock in. Rum, same deal. For whatever reason, on my blog, if you go through and see the big charts, the chart doesn't work for some reason. It thinks it's like a 15-cent name. But I talked about this a little bit. Either way, you've got that nice dip and rip candle over here, this nice longevity kind of, it adds longevity to the run. We've talked about quite often. So watch for that, and watch dips for potential continued breakout towards daily VWAP, and hopefully we have a nice setup from there. I am currently long on that. I rebought into the flush late day on Friday. So if you saw this action, you saw me selling over here in the room, and then I rebought into the flush. It was right under 11 there, and it came back nicely. So I as I said in the room, I was not looking to just flip it. Even though it popped back fast, I wasn't looking to flip it that day. I was actually going to carry it over. So Ideally, this continues to create an A+ setup for later, meaning up, 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 blow off, and then that unwind. And last but not least, I was watching LTRY. No position on this at all, but you know, it's obvious that somebody's been in the kind of the tape, and maybe it's just a fund that wants to have fun with it in a little bit with you know, maybe run it up 50%, consolidate, run another 50%. So we'll see. But it is a nice setup, and if we do start to maybe base over this 40 level eventually, I mean, there's no denying that there's been somebody, you know, kind of accumulating slowly but surely. So those are things that I look for. Doesn't mean I'm in it. I'm not in it right now, but I'd like to be proven right in the sense that, you know, 40 starts to base and we start to have a nice trend develop. So other than that, AMZ and Amazon, Apple, Meta, you know, those are all good daily drivers lately with the volume. And just be cautious. We talk about this often, but, you know, the rip your face off rally, especially in the SPY, you know, the most negative we've been was probably last week. And then now we're all the way back up to 388 or something crazy? I don't remember. Let's see. Yeah, 389 was the highest, 389 and change. So, I mean, this can last a lot longer than you think. What happens is everybody gets hedged and everybody kind of gets super bearish. They start to take bearish bets. They start to maybe liquidate certain things, and all of a sudden it comes back the other way and it extends further than you can imagine to the upside too. Just kicking the can down the road again. But either way, impressive. I would love to see this go back up. I think a lot of people will start getting excited for potential 400 again. And then we'll have one of those big pullback days. Everybody's going to say, all right, we're going back to the zero, and, you know, so on and so forth. So anyway, be cautious out there. Know when you are performing and know when you're not. Like I said, swings and the big picture ideas that I've been talking about have been working really well. But intraday, I have not been getting high confidence on the trades that I typically do. And, you know, you don't have to force a trade. You know, sometimes, you know, the fact that I run the room and, you know, I feel like sometimes I've got to be there or got to find stuff. But you know what? Knowing not to trade is just as good as finding a great trade, right? Knowing that maybe it should be hands off is half the battle sometimes. And I think that's about it. So otherwise, I will see you in the room. And again, like I said, we've got a flash sale. So if you have any questions about the room, reach out. But also for winner this week is Icon Meals. And so that is Stu. So Stu, you can email me your address and we'll get that shipped out to you. We'll do some t-shirts and lots of good stuff next week again. And that's it. Have a good rest of the weekend and happy Halloween.